The crypto winter is over, and Bitcoin could reach $100,000 by the end of 2024. That's according to Standard Chartered's head of digital assets research, Geoff Kendrick. He joins me now. Geoff, first, tell us about the factors that you believe are bringing on the end of the crypto winter and the repercussions of which, so many of us have suffered through.
It's kind of one of those self-fulfilling things. So in 2022, all the news in crypto space was negative. We had the Terra / Luna collapse in May, and we had the FTX collapse in November. But as we come into this year, things are just gradually starting to improve. It's kind of like in the real world. If I look out the window now, I'm based in the UK. It's a sunny day today. You'd think, winter is finally over. But if you'd asked me yesterday when it was chucking it down rain, I may have said something different. So you've had a few factors that are starting to head in that direction. The outcome of the banking crisis with SVB in the US has helped. Investor positioning was very short, etc. And as we start to go to the end of the Fed hiking cycle, things are just starting to improve gradually. And so I think that's enough as we approach the next halving for Bitcoin, which is in around 12 months from now, for investors to re-engage, if you like, with the asset class.
The irony, though, is that SVB collapsed largely because of its overexposure to crypto assets. So why hasn't this collapse actually deterred people from investing in crypto?
So when Satoshi first introduced Bitcoin to us in 2008, 2009, it was very timely because that came right around the time of the great financial crisis. At that time, investor confidence and retail confidence, etc., in more traditional financial institutions like banks was damaged. And also, the Fed were cutting rates aggressively after that. They started on the first QE program, etc. So, if you like, interest and confidence in the traditional financial sector was challenged. The main takeaway from the SVB and other financial crisis that's happened in the past couple of months is that, once again, investors are questioning traditional financial assets. So rather than the fact that SVB was heavily into the crypto sphere, a lot of investors in the space, etc., and businesses in the space used SVB. So that was bad for the crypto ecosphere, if you like. In terms of what it means for investor confidence in the traditional financial system, that's been hurt right now. And so as a result of that, the most liquid, non-traditional financial sector asset is Bitcoin. And that's why I think it's the one that will outperform now.
And you have incredible faith in Bitcoin. You forecast it hitting $100,000 by the end of 2024. What do you forecast for the end of this year?
I tried to lay out in my note yesterday, sort of like a stepping stone, if you like, to get to that 100,000. And quite a few of those steps should be achievable in 2023. And so I suspect we can get to about the 50 or 60,000 mark by the end of this year. Specifically, in sort of round number terms, before SVB, we're at 20,000. That banking sector concern has added roughly 10, so we're around 30,000 now. Obviously, we're marginally lower this week. The next thing that I think we'll see us higher will be Bitcoin's share of the overall crypto market should continue to increase. It can probably get back towards the 60% mark of total market cap within crypto, and that should add another 10,000. So that gets to about 40. I think each of those are relatively easy to achieve this year. Bitcoin miner profitability, which has also improved, probably adds another 10,000 because they shouldn't be selling Bitcoins right now. So that gets you to about 50. And then depending on what broader risk assets do, and here I'm thinking more of NASDAQ because there's a very strong correlation and crossover between crypto assets and the likes of tech companies, given that sort of heavy tech influence also within the crypto space. If we can get that to improve, so broader risk assets stabilize and improve once the Fed are finished hiking, maybe that adds 10 more this year. There's something between the 50 and 60,000 range, I would say, by the end of 2023.
So hopefully to 60, recouping some of the losses we've seen over the past couple of years. Thanks so much for joining us today, Geoff Kendrick, Standard Chartered's head of digital assets research.